Let's get sort of the big picture before we get into the nitty-gritty around the equity-like instruments. What are you seeing in terms of a stabilization in revenues, in terms of demand in the Kingdom of Saudi Arabia for your products?
Well, thank you very much for having me. Let me just start with how happy and excited the company is to wake up in the morning and hear this magnificent reform. The scope and the scale of this reform is unprecedented and is considered the most extensive reforms program for the electricity sector on a global scale. Now, for the revenue of the company, if we link all the reforms together and just read it carefully, we would understand how these reforms will shift the company to a much more stable and sustainable position when it comes to capital structure, when it comes to de-risking revenue. We had the reform called for the cancellation of the government fees. And I think in the start of your introduction, you alluded to the subordinated instruments. But that was not the only solution. That is part of the solution, which improved the capital structure. But we should see the impact also on the financial. And this is what the market have to really understand and digest when they see a cancellation of around 14 or 15 billion Saudi riyal that will be impacting the bottom line of the company and also will provide a sizable cash flow.
Fahad, good morning to you. It's Manis. Look, the market has all of those details in front of it. Morgan Stanley have said that, in part, converting this liability, the $45 billion of liability, into an equity-like instrument has the potential to boost your profits by 7 billion Saudi riyals a year. Is that a number that makes sense for you? By transforming this element, can you boost your profits by 7 billion riyals per annum with the reforms that you're implementing?
Well, as I said, Manas, when it comes to the bottom line, we're talking about a significant increase in the bottom line. Just take the cancellation of the government fees of 14 billion, and that is going to be alone something to be translated into the P&L and the bottom line. So, yes, as I said, it's a capital structure improvement, a big improvement, but also we had the impact or the benefit on the bottom line, which will be so significant.
You're burning a lot of crude fuel oil and diesel in your power plants. The government has a mandate to move away from that to more renewables. Just briefly, how much progress have you made and are you going to be able to make as we get into 2021?
I think the company have done a great work when it comes to displacement of liquid fuel. And we started with mainly the diesel, converting most of our fleets or units, the inefficient unit, into more efficient crude. And we are on the way, as you probably heard or the market heard, His Royal Highness, the Minister of Energy, in his press conference last Monday, when he alluded to the plan and to converting all the liquid into renewable and gas fire units. So we have done a great job on eliminating almost 70 to 80% of diesel. Now, I think what we have embarking now is going along with the Ministry of Energy, implementing their policy into shifting the liquid into more renewable and gas.